Hey traders, David Frost, LazyGapTrader.com. In this video, we're talking about day trading. More specifically, we're talking about gap trading and how gap trading is by far the single most consistent and profitable day trading strategy you're going to find across the markets today. I do a couple of things. I teach a course where traders learn two specific gap trading strategies. The first one is known as the morning gap trades, and the second one are the gap fill trades. First, let's discuss the morning gap trades. This is where stocks are gapping higher or lower from yesterday's close. When stocks are gapping at the open a significant amount, it creates an opportunity for traders. The opportunity is for traders that can identify a specific price level where stocks will first be drawn to like a magnet and secondly have a price reaction from in the other direction. What I also do is give traders an opportunity to get my gap trades sent to them each and every day at 9 o'clock in the morning Eastern Standard Time, 30 minutes before the markets even opened for business. Here's a copy of the email that went out to subscribers, as you can see, at 9:01 a.m. Eastern Standard Time. Today, we had 7 potential morning gap trades on the board, and that's common during earnings season, which we're in right now. So earnings season really got kicked off about a week ago, and they're going to start to come fast and furious as the days go on. It's been relatively quiet this week from a market volatility perspective, but that will certainly change as the days go on. It never stays this quiet during earnings season for very long. So far today, only one stock hit its price level but did produce wonderful profits. We're going to talk about this one in more detail. It's Checkpoint Software. The other ones on the board didn't hit their levels, and therefore when a stock doesn't hit the specific level that traders learn how to calculate through the course at Lazy Gap Trader, we don't want the trade. We only want the highest probability trade setups we can find. When stocks come into their levels that we calculate, we know it's a high probability trade setup, therefore we're taking the trade. Until and unless these stocks come into the specific price levels, we don't want them. However, Checkpoint Software today did come into its price level, and you can see it was a gap lower. Support levels are $106.97, and then I gave a secondary level if the stock should have traded lower than that. The stop and profit target is about 50 to 80 cents. This is a minimum profit target. We're going to take a look at this chart in more detail. Also found in this morning email is a list of gap fill trades. This is the second component of the course where I give traders an entire strategy how to track these trades, how to trade these trades. Not all trades are created equal, and depending on when and how these stocks may come into their gap fill level, we may or may not want the trade. All that's obviously taught in the course at Lazy Gap Trader. We did have one so far today that came into its gap fill level. It's the third one down, STM. You can see the gap fill level was $16.54. It's listed as a short trade, meaning we're selling the stock short at that level, $16.54. We're going to take a look at this chart as well. We're back on the chart of Checkpoint Software, and you can see where the stock closed yesterday. All the way up here at $115.62, the stock was getting a nice haircut at the open, opening the day at 108.80 and traded lower. The level given out to traders at 9 o'clock in the morning was 106.97. Also, this is the same exact price level that any trader that's taken my course was able to calculate on their own. You can see what happened when the stock came into the price level of 106.97, making a low of 106.66, and then taking off to the upside, and just minutes later found at a high of 108.70. That's almost a $2 gain in just a matter of minutes. Certainly more than the minimum profit target cited in the email that went out to my traders. In addition to this, you can see the stock coming back and forth in and around the 106.97 level. That goes to show you the importance of this price level. In the course, I teach traders exactly why these price levels are important. which gives traders an added confidence when taking a trade at these price levels because they have an understanding of why these price levels are so important. Trading is all about confidence. The more confidence you have, the more you can take your emotions away from the trade and the more profit you can make. That's just simply the way it works. Remember this stock, STM, ST Microelectronics, from the gap fill list. The gap fill level, or the sell short level, was $16.54. The stock was gapping higher at the open, traded right into that level, and then you can see what happened. It immediately backed off, making a low for the day so far of $16.23. And for a $16 or $17 stock, that's a tremendous day trade. It's a tremendous scalp trade. That represents about a 2% gain on a scalp trade that was taken on a level that was given out to traders before the market even opened for business. Traders, you can learn this strategy for yourself. It's something you can use for the rest of your trading career. Everything that you need to know in order to trade the gaps successfully is found in the course at Lazy Gap Trader. Come over to check it out. It's a strategy that you can build a foundation and use for the rest of your trading career. I'm David Frost, LazyGapTrader.com. Thanks for tuning in, traders.